Hey there, everybody. Tim from Alpha Wolf Trading coming at you with this week's market overview and a few earnings stocks to watch. Let's just take a look. I hope everybody's having a fantastic weekend. Just want to extend a special thanks to all those that have made sacrifices for our freedom and keeping us safe. And I wish everyone a wonderful Memorial weekend. All right, so um, let's take a look at last week's list of stocks to watch. Now, this NMM, which had a 1,300% return, that was a reverse split. It was just a stock for the pro members that I suggested to keep an eye on because of the fact that they did a reverse split. And actually, for the pro members this week, I have some shipping names because we've got earnings coming out. That space could be an interesting space to keep an eye on. NMM, because of that reverse split, could get some action if there's any kind of traction within the space off of some earnings. So that one is not up 1,300, but there were still some nice movers within the pro member watch list for last week. SESN was up 40%, actually was up higher through in the first part of the week, and I actually like that one to carry over into this week. NOVN, another one that had a nice move. AVTR, recent IPO, that one was actually higher in the week. IOVA, FSI, a couple of these names actually are going to carry over to next week for the pro members. But that's the performance of the stocks to watch for last week. Um, this week, as far as hold on a second here, as far as economic data we get on Monday, we've got nothing, of course. Case Shiller on Tuesday. Weekly jobless claims on Thursday. GDP revision. Pending home sales. We've got personal income, consumer spending, core inflation, Chicago PMI, and consumer sentiment index on Friday. So there are a couple of things there that could impact the markets. Nothing really significant. And then we've got some earnings as well next week. And there are names in here that I think you definitely want to keep an eye on. Marvell Technology, I think is one. Alta, that's been a momentum name. Palo Alto is another one I think you want to keep an eye on. Those aren't really ones that I'm focused on in terms of maybe taking any kind of a trade, but those are still names that I think you want to be aware of what's happening with those. And then I've got a small list of names that actually I am going to try and keep a pretty close eye on from their earnings. So we'll get that to a second. In a second, let's take a look at the overall markets, though, right? So IBB actually kind of looking like a bear flag, but it is trying to hold above that 100 spot. We'll see if that will continue to act as support. So far, it is holding up, but still not a very attractive looking technical setup there in IBB. IWM, we're trying to hold on to that 150 level. And maybe this week, if we break below that 150, that could become problematic for the small caps. Bottom line is a lot of these charts are not looking very healthy, not looking very strong, at least from a bullish sentiment, right? So we're pulling back in IYT, broke below the 50-day, broke below the 200-day, at an area of potential price support. We'll see if it holds or if we wind up breaking and heading lower. QQQs, the FANG names, a lot of stuff within the tech space getting hit because of the China concerns. SMH following right in line with that theory. Semiconductors pulling back. Marvell, I think, will be an interesting one this week, see what they report. But, we broke below the $100 support area on SMH, and I think that is somewhat concerning. So we'll see. The question becomes with all of these things is, how far will we pull? Will we pull all the way back and get a double bottom test of those lows down in December? And look, anything is possible. I don't know. I'm not suggesting that we are going there, but that is a possibility. So, This is definitely a time to be cautious and play size appropriate. Don't try to be a hero and catch a falling knife. So S&P 500 managing to hold above the 200-day at a pretty key area of potential price support. If we break through this price support and break through the 200-day, that's going to be problematic. TVIX, TZA, I've mentioned this before. You keep an eye on these things for potential short-term trading opportunities. But if they happen to be gapping up in the morning, it's not something that you want to chase, right? These things are setting up. If the markets roll over, if volatility really spikes, TVIX, you look to play that for a short-term trading opportunity. And if the IWM really breaks down, TZA is something you look at for a short-term trading opportunity as well. Aerospace and defense actually has been one of the sectors that has held up very well. Maxar had a pretty nice pop last week off of a contract announcement. The space is actually holding up fairly well. There are a couple other names within that sector that look good. I actually would like to see that space break down with the rest of the spaces because I'd like to jump back into a couple of names that I recently traded. So aerospace defense holding up well, and maybe a sector that continues to hold up well, but I'd like to see it pull back. Home builders tested the 50-day as potential support, closed below it. I think potentially home builders, we could be seeing a pullback and test of the 200-day moving average. There are a couple of home builder names that I think are interesting, but I would find them more interesting at lower levels for potential snapback bounce plays or short-term swings. Even maybe a couple of names within that space as a long-term hold consideration, but we'll have to see how it plays out. XLB building materials breaking and below the 200-day moving average, below the 50-day. XLE continues to perform poorly. Bear flag broke down last week. XLF trying to hold on to the 50 and 200-day moving average. Financials, it is holding up, but if we break below that 200-day, that could be problematic for the financials. Industrials back below the 50-day, trying to hold on to the 200-day. I think with all the trade tensions, if those continue, I think that is going to be a sector that's going to be somewhat challenged. XLP, consumer staples, considered a potential safety trade, consolidating right below some trend line resistance. A lot of these names that trade within that space are not trading at cheap multiples. So while it is a space that is perceived for safety, I'm not sure how much higher that goes. Maybe we could see more consolidation within that sector, potentially even a little bit of a pullback. But I think it's at the valuation some of those companies are trading at, it's probably a tough trade there. XLV Healthcare coming up into the trend line. We've got the 50-day and 200-day. That has been a relatively strong space. We'll see if it can take out that trend line. But that could be a sector to keep an eye on for potential move higher if we could take out that trend line. XOP, oil and exploration, bear flag breakdown. It looks like we're going for a double bottom test. Retail got smashed, right? Last week had a lot of retail names that reported, disappointed. And, that sector is reflecting that. It's never been a favorite sector of mine. Never going to be a favorite sector of mine, but definitely seeing a little bit of pain there. So, overall, not seeing a whole lot to be extremely bullish about, right? So I think you still need to be cautious with most of the sectors out there. Keep in mind, and I say this all the time, cash is a viable position. You don't need to be trading or in something all of the time. sometimes it's best just to sit on the sidelines and kind of see where things develop, right? So keep that in mind. All right, so moving along, let's take a look real quick at the T2108, T2106, T2107 McClellan oscillator. Detecting fear. We're not anywhere near extreme fear levels, according to the McClellan. So we're just kind of hanging out. So you get down to the negative 158, negative 250, negative 300 area, and you're starting to see some panic out there, and that could be a really good time to dip the toe, even though it's a gut wrenching thing to try and do. But right now we're just kind of fiddle in the middle. T2107, T2108, the amount of stocks above the 200-day moving average, the amount of stocks above the 40-day moving average. And remember, get down to the below 20 and below. Those are indication. That's an indication of maybe this is time to start dipping the toe. Over 70, it's maybe time to start shedding some or taking some profits and farming some of the stuff that you have in your portfolio. So right now we're just kind of fiddle in the middle. There isn't an extreme one way or the other, although we do appear to be trending lower. So, if we start to get below the 20, start to get into single digits, and we see a spike in volatility, that could be the time that maybe you look to get a little bit more aggressive. So, really, could we chop around a bit? I think that is a strong possibility that we just continue to chop around. I think there will be opportunities in specific sectors. One area of that has been holding up really well that I've noticed is software application. That has been a sector actually that has held up fairly well, and I think there's some pretty good looking setups within that space. So that may be another sector you want to take a look at. All right, so let's take a look at the stocks. Hold on a second. Let me pull up. The earnings calendar here so we can take a look and see which stocks are reporting when. So, there are a couple other names like NIO is reporting Tuesday morning. That could be interesting. That's an electric car play, and it had a nice run earlier in the year. Just pulled back. That could be interesting come Monday morning. But Momo, and I always have to pull this one up. Okay, so Momo is one that had Momo a long time ago. It has since lost that Momo, and I'm pretty sure that was from a couple of disappointing earnings, actually. It's getting to an area where it could get interesting for a potential bounce play. If they disappoint, they report Monday morning. They disappoint, maybe you find some support here at this 2250 area. If that area breaks down, that becomes pretty problematic for Momo, right? Then the next area of potential support may not be until maybe the $20 mark, 1960, $20, $18, something like that. Those could be areas but I mean, you do have potentially a little double bottom here on the weekly time frame. If we break through that double bottom, it's that'd be problematic for Momo. It's really not looking like it's going to find some support here, at least at the moment, but we'll have to see what happens, right? So 2250 in that area could be a little bounce spot, day trading opportunity. If they report good earnings and give good guidance, maybe it's a swing opportunity worth at least having on the radar through their earnings. See what their earnings report is on Tuesday morning. All right, so Momo is one. QTNT, great looking daily chart on this one. 53 million shares in the float, consolidating just above the 5. You got a little kind of flag pattern there, right above the 50-day moving average. Just below the $10 holla. You can take 10 out with conviction. I think possibly you get an 11 test. And these guys report. Where do they report? report? They report. Hold on a second. QTNT, where are you? Where are you? Okay. Having a hard time finding it here, obviously. There's not that many stocks on this list. Oh, their report Tuesday before the open. So uh, we'll know Tuesday morning whether or not this thing is in play. 53.8 million shares in the float. It's got a nice uptrend going on here. Nice little pattern there. Take out $10. I wouldn't chase it. You know, if it gaps up, I certainly would not chase a gap up on it. I wouldn't chase a gap up on anything in this current climate, but this one definitely worth having on the radar. iClick reports, let's see, they report Wednesday before the open. It's got an interesting look, right? So we've got a little bit of an uptrend line here. We're flirting with the $4 holler. We're at the 50-day moving average. We're just below the 200-day. Got a long-term trend line here to contend with, right? So, you know, might find some resistance about 435, 450, somewhere in that area. But if it can take that out with some conviction and then stay above that trend line, that could be interesting for iClick. I think it's worth having on the radar, potential trading opportunity. The problem with this one is it's super thin. 11,000 shares traded on Friday. So super thin. You got to have some volume in order to play it. You know, it has had some volume spikes, but it hasn't had, I mean, let's go back to this candle here. It had a little spike and closed in the lower portion of the candle. So can be a pop and flopper. Keep that in mind. Definitely don't want to chase it, but could be worth watching for a trading opportunity off of earnings. NXGN, good looking setup on the daily, consolidating here, 19 and change. You know, got a little bit of a flat top breakout here, kind of a little flag pattern there. I like the setup. Maybe you get a break over the $20 hollow with conviction. 58 million shares in the float, not a big float. Those guys report NXGN reports Tuesday after the close. So pretty good looking setup there on NXGN. See if maybe we get a break over the $20 holla. Bison. So Bison, you know, China play. You know, it's had some really nice pops off of earnings. Had a double top over here at $65. It broke down. Had another little run here, and now we're pulling back to an area of potential price support in $35 range. You know, if these guys report good earnings, give a good guide, potentially maybe we see a trend line break and we can reclaim the you know, the 250-day moving averages. So I mean, this can be a pop and flopper. You don't want to chase it. You know, especially with all the China concerns, but I do like Bison, and I think it's in an interesting spot for potential bounce support. And I'm thinking maybe a little short-term swing in that name. I wouldn't take it until after the earnings if it sets up. NM is reporting Tuesday before the open. Shipping name, right? So I think it's worth having it on the radar. You know, if they report a good number, they recently did a reverse split, 1-for-10 reverse split. You know, maybe this goes into play. And then, you know, I also look, I think, let's see, Euroseas is reporting. There's a couple of shipper names. Safe Bulkers is reporting. So that whole space could be in play. You know, we'll see what happens from these earnings, but there could be some sympathy plays within the space if you miss one of these popping, or you know, if they drop, same thing. I mean, you might see weakness across the board. So shipping space, on the radar. All right, and that's it for this week's market overview and a few earning stocks to watch. I will have a full list of, I got actually a big list of stocks to watch for the pro members. I'll have that out to you shortly. Be careful this week, right? Going to be a short trading week. We could chop around a bit more here, so just keep in mind cash is a viable position. You don't have to trade every day. Okay, that's it. Be safe and have a wonderful rest of your holiday weekend, and I'll see you Tuesday.